Hello, everybody. Welcome to this webinar on commodity derivatives. This will be a webinar where we'll handhold you on how to do commodity trading. Before that, firstly, thank each one of you for taking off time and joining this webinar. We at ICICI Direct keep doing this kind of webinars to educate our customers. This webinar on commodity derivatives, I mean to say this topic of commodity derivatives, we'll have webinar every Thursday at 4 p.m. First week of the month, it will be a handholding session. And the following week, we'll be discussing about insights, trends, and forecast on commodities along with our research expert. I have with me my colleagues, Jitendra Patle, Arvind Jinka, and Beauty Dubey. And we all promise you to give you our best. At the end of the session, each one of you should be able to very clearly understand what is the journey, how to activate, how to trade in commodities, what are the different products, and also the journey on both mobile and web. So we'll have initially the introduction on commodities. What are all the commodities which are traded? Why to trade commodities? Then we'll talk about the trading journey and the different tools that are there on ICICI Direct Super App platform and also on the web. So I request my colleague Jiten to take up the introduction on commodities, try to keep it as crisp, as easy to understand, and tell us why to trade commodities and how to trade commodities. Over to you, Jiten.
Thank you, Ramesh, for setting the context of the webinar. So I am Jitendra Kumar Patle, Commodity Product Manager at ICICI Securities. I will take you through the why someone should consider commodities for their portfolio and why they should invest in the commodity as an asset class. Apart from that, I will take you through what are the fundamental factors which affect the commodity prices, which are the exchanges globally in India where the commodities are traded, and what are the commodities traded and what is their contract specification. So let's share my screen. Yeah. So talking about commodities, first of all, we need to understand why commodities should be part of your portfolio. When we are talking about a 5 trillion economy or when we are talking about a make in India, then definitely commodities would be the part of that journey. And someone who is looking for such a big growth, we can't ignore the commodities. So commodities should be the portfolio part of portfolio. Why again we are talking about the commodities? The commodities are actually real asset. They are tangible asset when we are using in day-to-day lives. So commodities should be the part of your portfolio. And again, we seen the situation like COVID when the equity market was going down. That time gold given the good return because commodity or gold is understood as a safe haven asset. So definitely everybody was looking for gold. So we again say that we don't put all eggs in the same basket. So if we are talking about a diversification of portfolio, so gold should be part of your portfolio. Basically, commodities are divided in two parts. One is hard commodities and soft commodities. So gold, silver, crude oil, natural gas, all base metal are considered as the hard commodities. Whereas the agriculture commodities like cotton or jeera, soybean, these are considered as a soft commodities. And again, gold is a tool, hedging tool for fight against inflation. So moving ahead, now let's understand why someone should add commodity to their portfolio or commodity derivative to their portfolio. When we are talking about a derivative exchange or the commodities on exchange platform, so we trades in the futures and options and which provide a leverage. You can trade, you can take the position in gold with 10% margin or silver with the 15 to 17% margin. So commodity trading on exchange provide a leverage. And these are very liquid market on exchange on daily basis. So close to, I think, approx 2 lakh crore is a daily average turnover happening on MCX. So enough liquidity is there. And as I said in my previous slide, gold provide the diversification to your portfolio. Whenever any geopolitical tension, we have seen that recently there was tension in Middle East, but definitely the prices of gold went up. So this way the gold provided diversification. Also gold considered as a hedge against inflation. And prices on these exchanges are transparent. You can see the top 5 bid offer, or you can say the buyer and seller prices, and whatever the high, low, close, or trading price at your fingertips. The last point about the commodity market runs till late night. The market time is almost 15 hours. So commodity market runs from 9 a.m. to 11:30 or 11:55 p.m. Now let's understand about global exchanges. Which are the global exchanges? Which are the major commodities traded on those exchanges? The NYMEX. We are talking about the US and NYMEX, where the all energy like crude oil and natural gas are highly traded and prices are derived from those exchanges. Similarly, COMEX, where the gold and silver traded and prices of gold and silver in India also derive or taken from the COMEX. There is a exchange CBOT where the majorly the agriculture commodities are traded and prices of those commodities are derived from there. Now the moving to the LME, that is London Metal Exchange. All base metals are highly traded on LME, predominantly traded on LME, and worldwide the prices of base metals like copper, lead, zinc are derived from or indicated from LME. Another exchange, ICE, that is intercontinental exchange, where the cotton, sugar are traded highly and prices of cotton are derived from those exchanges. The last is BMD. Again, the crude palm oil, which is the edible oil, is highly traded on that exchange and prices are derived from those exchanges. Moving to India, in India we have the basically 4 exchanges, but major exchange of India or leading exchange of India is multi-commodity exchange, that is the MCX, and here it is since last more than 20 years. So apart from that, NCDX, BSC and NSE also started commodities, but this almost 97 to 98% of trades or turnover of commodity market, Indian commodity market, is on MCX. We discussed hard and soft commodities, so all except the agri commodity, all commodities like base metal, bullion and energy are classified as hard commodities, and other commodities, agri commodities, are called as a soft commodities. Now let's understand what are the factors affecting commodity prices. I request my participant to put your questions, whatever questions you have, put in a YouTube chat box. We will try to answer those queries in chat box itself. So I request to place your post your queries in chat. Now, understanding about the factor affecting commodity prices, the primary factor is basically it is a demand supply game. If the demand of that particular commodity is higher, definitely prices will be up. Prices will be higher. And in case the demand is not there or supply constraint is there, then prices supply is enough, then the prices will go down. So this is basically the demand supply or production led factors. So apart from that, government policies or tariffs or import duties again impact the commodity prices. In case the producing country increases the tariff or taxes on that particular commodity, the prices of that commodity will go up. We have seen that India recently government is imposing some duties on the onion export. The prices of onions are going high. So this way, the way we can correlate to the other commodities. Geopolitical tensions, like we have seen in Israel or Russia, Ukraine, whenever such situation comes, so definitely the supply of some commodities get impacted and prices of that commodities goes up, like crude. We have seen that whenever such geopolitical tension comes, the people looks for the safe haven commodity like gold. The gold prices goes up. So these are the basically major factors which impact the commodity prices. Moving ahead, let's understand the correlation with Nifty for commodities. So because we understand we track the equity market on day-to-day basis. So whenever the prices of crude oil surge, so definitely the margins of few companies get impacted. Like you can take the example of paints, where the crude oil is raw material. So if prices of crude oil goes up, so the stocks price of Asian Paint or any paint company will go down. So there is the inverse relationship between the crude oil and you can say the equity market. Similarly, gold and Nifty, whenever the situation where the equity market is not performing, the people looks for the safe haven asset like gold. so gold prices goes up. We have seen in COVID-like situation, or we have seen when the Ukraine crisis happened, or Russia or Israel conflict arise. So that time the gold prices went up. So moving next, now what are the exchanges and what is their market share? So basically, as I mentioned, MCX has 98% market share, 97 to 98%, and basically other exchanges, NSE and other exchanges contribute 2 to 3%. This is the data for first of the fiscal year 2025. So in ICICI, as ICICI, we are providing the commodity trading on MCX only. So MCX is the we are the member of MCX. So apart from that, talking about the market timing, we discussed 9 a.m. to 11:30 or 11:55 p.m. Is the market timing. Actually, the March to November is the market timing till 11:30, and after that, because of US daylight saving, timing get extended by 25 minutes and runs till 11:55 p.m. So there is almost 14 to 15-hour market time. And whenever in India we have the trading holiday in equity market, the commodity market most of the days runs in evening shift from 5 p.m. onwards. So we have the almost 14 days extra in commodity market. Talking about the bullions, let's understand about the commodity, that is gold. So again, as we discussed, gold is the largest traded commodity and considered as a safe haven asset, or we can say that it is a inflation hedge commodity. And uses of commodity is basically for jewelry. We everybody we use for ring or ornaments. We use the gold. Apart from that, gold is considered as investment for investment also. So for people taking the position, taking investment in gold through ETF or SGB or various other digital gold like a instrument. Apart from that, we have seen recently that central bank are increasing the reserves or strategic reserves of gold. So these are the uses of commodities or as a gold. Now talking about the factor affecting the first is we can talk about the US Fed rate. If US Fed rate is lower, then definitely it is positive for gold, because people are looking, people will shift from other asset classes or debt instrument to gold, because there will be the higher returns. And similarly, if US Fed rate is high, where they will get the good returns, so people will shift from gold to other instrument like bond or debenture, and this way that there is a inverse relationship. Inflation, as I said, to beat the inflation, people are taking a bet in gold. So gold prices will go higher in case inflation is higher. And as we discussed, central bank are buying, then definitely the gold prices will go up, and unstable geopolitical tension also increase the price of gold. So this is positive for gold. Now, how we can invest in gold? One is the physical way, where another is ETF, mutual fund, SGB, digital gold. But talking about the derivatives or future option on MCX, the only difference is, or major difference is, capital. Whenever we are talking about a physical gold or ETF or SGB or digital, the 100% capital is required. You need to put 100% money. But in derivatives like gold future, you need to have the approx 10% margin, and you can take the position and you can get the benefit out of the price movement. And also here the liquidity is very high. You can easily exit and entry and exit. Apart from that, gold you can consider for your investment portfolio. Moving at second commodity, that is silver. Silver is considered as an industrial commodity. Yes, industrial commodity, because almost 60% of the use of silver is for industrial purpose. So whenever any industrial expansion or industrial growth is there, then definitely the silver prices will be higher. So again, talking about the technology, in various technology like mobile, also we use the mobile or television also, or smartwatches also, the silver is used. If the expansion in this sector, definitely it will help to the prices of silver. And as we said, third is the jewelry. Jewelry is another way, approx 15 to 20% used for jewelry. So there is a demand, high demand of jewelry, then prices of silver will go up. This is the brief about gold and silver contract. There are actually four variant of gold: gold mini, gold genia, and gold petal. Gold is a 1 kg contract. Gold mini is a 100 gram contract. Gold genia is 8 gram contract, and gold petal is 1 gram contract. So you have the choice where you wanted to start, or where you wanted to trade. So you can start with the 1 gram for as a demo trade also. Apart from that, in silver we have the three variants: silver mini, and silver micro. Silver is a 30 kg contract, silver mini is a 5 kg contract, and silver micro is a 1 kg contract. And prices of silver is quoted in 1 kg only, whereas in gold and gold mini is quoted in 10 grams. But in gold genia is 8 gram contract, and gold petal is a 1 gram contract. And options are available on gold mini, silver, and silver mini. Let's move to the energy segment. Energy is the one of the segment where we can see the very good attraction. And talking about energy, there are two commodities. First is crude oil, and second is natural gas. These are the two commodities traded on MCX. Talking about crude oil, it is very easy to correlate, because on day-to-day life we are using petrol, diesel, and petrol, diesel are the way, you can say the derivatives of crude oil. It is derived from the crude oil. So if we see that the prices of petrol goes up, it means that somewhere the raw material prices of crude oil prices went up. So that's why we can correlate very easily. And crude oil is considered as a black gold or mother of the financial market. Again, crude oil is the highest volatile commodity, or you can say the very volatile commodity. That's why the people is inclined to crude oil. And just wanted to share, as of now, the crude oil is the highly traded or highest traded commodity on MCX as well as globally. So talking about the liquidity is very enough. Almost 50% of the daily trades on MCX is happening in crude oil. So crude oil contributes almost 50 to 60% of MCX turnover. Now, how to trade in crude oil? So there are basically future and option contract. In future and option, we also have the mini contract. So mini also provide us the opportunity to enter with a small amount in crude oil. So you can test with a small amount in crude mini, which is a 10 barrel contract, whereas the crude is a 100 barrel contract. Now the talking about the fundamentals of crude oil. Basically, it is a supply demand concept again. In case the supply or production of crude oil is higher, definitely the prices will be little lower. But in case there is a constraint in supply, or demand is high from countries, then definitely the prices will go high, as we seen in earlier slide. Again, OPEC is the organization which of oil producing countries, where this decision is very important for crude oil prices. And also the US production, because US is one of the highest producing country in for crude oil. So OPEC decision and US decision on production side will also impact the crude oil prices. So every week crude oil inventory data comes. So that data is also important. In case the inventory went up or is higher than actual expectation, then definitely the prices of crude oil will go down. But in case inventory is going down, then prices will go up. So these are basically the factors which affect the crude oil prices. Similarly, we have the natural gas, that is the second commodity and one of the top commodities traded on MCX. And this is basically used for transportation or cooling or heating whenever any extreme temperature or extreme weather is there. Then again, for balancing the temperature, natural gas is used. So basically, again, the crude oil, natural gas is industrial commodity, where 38% is for electric power purpose and 32% for industrial purposes, natural gas use. Moving ahead, These are the contract specification. Crude oil, that is 100 barrel contract. Crude mini is the 10 barrel contract. Natural gas is 1250 MMBTU. MMBTU means million metric British thermal unit. And similarly, natural gas mini is 250 MMBTU. And these all four commodities are available in options as well. But please make sure that you read all this margin and other detail, because in all these energy commodities, if you are entering into future trades, so in last 5 days, there is an incremental pre-expiry margin. Talking about the base metal, let's discuss about the copper. Copper is called as a doctor copper. And this the copper, we know that it is basically used in electric wiring or building construction or infrastructure. And this is the safest conductor of electricity wiring. So it is used for electricity purpose. If construction activity or international trade is rising or expanding, it is positive for the copper prices. Similarly, in case there is a production disruption, the prices will go down. Or if is there any if any production constraint and supply is restricted, then the prices will be up higher. And if there is a heavy production or overproduction, the prices will go down. Now, what are the commodities available in base metal segment? So definitely there are the four commodities are traded on MCX, that is aluminum, copper, zinc, and lead. Also, there is a mini contract on aluminum, lead, and zinc. So, the lot size of aluminum is 5 metric ton, and aluminum mini is 10 metric ton. 1 metric ton. Copper, it is the only one contract, 2,500 kg. Zinc, it is a 5 metric ton, but we also have the zinc mini, that is a 1 metric ton. And lead, similarly, lead, we have the 5 metric ton and 1 metric ton. Now, the last thing I wanted to cover, that you need to also check the global economic calendar, because these are the global commodities, international commodities. Any data or any kind of numbers comes in any country, that affects the commodity prices. So every Wednesday, US inventory data comes, and if that need to be tracked. Every Thursday, the crude oil, natural gas stock change data comes. So that need to be checked. This data comes usually 8 o'clock, but from November to March, it comes at 9 o'clock because of US daylight saving. So here in calendar, you can see that US, in green color, we have highlighted US existing home loan data, or inflation data, or GDP data, that affects the bullion prices, gold prices, silver prices. And in the orange color, we have highlighted crude oil and natural gas event, which affects the energy prices. So this is about the commodity market. We have seen which are the exchanges are there. So in India, we have the four exchange, but we are live on only MCX, gold, silver, crude oil, natural gas, and aluminum, copper, lead, zinc. These are the 9 commodities highly traded on exchange. And we are a member of MCX. These are the commodities available for trading. And market timing is from 9 a.m. to 11:30 or 11:55 p.m. Margin start from 10%, and it varies from commodity to commodity. So this is about basically the commodity, how to trade, and what are the commodities. Now I will request my colleague Arvind to just take you through our ICICI Direct mobile app, how to register for commodities and how to trade. So Arvind, over to you. Thank you.
Thank you, Jiten sir, for that informative presentation on the commodities market. That was really helpful. I'm sure our viewers would have gotten enough details or information about whether or why or not to trade in commodity derivatives market. So now I will take ahead the session by sharing the mobile app, and I will explain how starting from login, or starting from how to install, where to install, and how to log in, what are the features basically in our new app. And I will go ahead with the commodities presentation, or the commodities order placement part also. So I'm just sharing the screen now. So this, I've opened it on iOS. So this is the actual name for the app. So just make sure that you install the right app, which is ICICI Direct Stocks F&O MF IPO. So you can check for the same in the Play Store too, Google Play Store, or on the iOS. So now once I've opened this and once I've installed this, and if I try to open the app, since I've already logged into this account before, it is asking for biometric login. So anyone who had logged in for the first time will automatically be prompted to enable the biometric login also. So since I've not given my facial recognition, I'll just give cancel and show you how normal login can be done. So you can use the same password or PIN that you use in the website. So if I give the PIN here, it will automatically, and then click on login, it will ask for an OTP, of course. So once if I've given the OTP, it will log in directly. But since I had already logged in this mobile some time ago, it did not ask for any OTP and logged in directly. So other than that, I can also enable my biometric login too. So anytime any customer anyone who logs in for the first time through the mobile app, they will automatically be given the prompt to enable the biometric login too. So one can do that. And so this is how the home page or the home screen looks like for the app. So once you log in, this is the page that you land in basically. So the top right corner, there is this portfolio value where you can hide or unhide the value for you to check it quickly. I had personally had it on a light background. There is a bottom right corner menu where you can and here at the top left corner there is option to change it to dark mode or light mode. So since most users prefer dark mode, I'll take up the session in the dark mode only. So so this is the home page, right? So you can see here under discover products, there are multiple products visible here: stocks, F&O, mutual funds, commodities, IPO, ETFs, bonds, loans, life insurance, general insurance, one-click premium, global invest, NPS. So that is the benefit of this app. We had multiple apps before, but ICICI Direct's new app, in this app, it covers all the product basket, the entire product basket that ICICI Direct has to offer. So you can access multiple products all in one single app. So that's one beneficial. And additionally, this will help you to seamlessly or easily do your trades, buy your stocks, or trade in futures and options, or trade in commodity derivatives. It is both seamless and it will parallelly help you or allow you to access across different product baskets. So once I log into the commodities or once I enter the commodities page, if I click on the commodities here, so this is the commodities homepage or the overview page that it looks like. First, we get the commodity prices, both option chains and futures. So if I click on any option chain, it will directly take me to that particular option chain, right? If I can go back and also go for any futures and select any contract, which will open the overview page directly. This is how the future overview page looks. So if I also scroll down a little bit on this commodity overview page, there is this most traded section, right? Both options and futures. So this plus symbol allows you to add the contract directly to the watch list. I can click on view more to see more most traded contracts here, both within futures and options separately. There's also a section for research recommendations directly. So if at all you want to look at research recommendations seamlessly, take the mobile, log in with your biometric login, go to the commodities page, scroll down, there is research recommendation here. Click on view all and it will take you to the commodities research recommendation page where all the recommendations are visible, both in futures and options. And at the bottom, there are research reports too: daily morning report, daily evening report, weekly report, and special report also. So there will be one monthly report also which can be added here. You'll get it soon if you don't have it. Please update it to the latest version. So now, if you want to start trading in the commodity section, so I hope everyone is able to see the different contracts or the overview page here. And if you want to trade in the commodity segment, one will have to register themselves for the commodity segment. There is a registration process. At any point of time when you had created the account, if you had selected the commodities segment 2 to be included in your account, then your client information would have been sent to the exchange, that is MCX already, and your UCC would have been created. If you had not selected or opted for the commodity segment during account opening journey, then you will have to do it separately now after opening the account. So if you go ahead and try to place order in any particular contract. So for example, I'm going at the top search bar mein, I'm going to give an example with the contract with the least value, and that is gold petal. So I will type GOLDPE, and it will show all the gold petal contracts which are expiring in the coming months. So the current month, let's say I take up the gold petal contract, for example, I can look at the market depths here, the bid and ask depths, the bid and ask prices. At the above the bid ask prices, there is a link for charts. Next to that, there is an icon which will add to the watch list directly. So I can click on any specific watch list and I click on add, it will get added in the watch list directly. So there is a chart which I can check out. So if I can expand where I can use the indicators too. And there are other contract details shown at the bottom. Now, if I click either on buy or sell, so this is the order placement page that I get, where I can increase the lots, the number of lots of trading by just clicking on the plus or minus buttons. And I can either choose a market order or I can place a limit order. So market order executes the order in whatever price the contract is trading at, or at a limit order, I can enter the price that I wish to execute this order at. So the price is 7695 at the top left corner. You can see 7695 is the price of the contract currently. Let's say I will enter 7600. This is done. And then if you expand the charges and more part, so and you can see this trigger price option. So if you on it, if you switch it on, it will become a stop loss order. If you do not switch it on, it is a normal order. So below that, there is 4 different options like day, IOC, GTC, and GTD. So day means the order, if you place this order will be valid till the end of the day or till the closure of this trading session, which is at 11:55 or 11:30. Then there is this IOC, immediate or cancel order. That is, once you place the order, the system will try to execute the order immediately, or if the price is not achieved, there is no expected price, the 7,600, the order gets cancelled immediately. Then there is this GTC order, which means the order will stay valid until you cancel the order. That is, it will be staying in the system even tomorrow, even day after tomorrow, till you cancel it. Or the maximum till what date the order will be valid is the expiry date for this contract. If the gold petal contract is expiring on 31st December, so this order will stay valid till 31st December until it gets executed when the price is reached. So that is what GTC means. And then there is GTD, which calls good till date, which means here you can enter a date. If 31st December is the expiry, let's say for example I select 25th December and I click on OK. So this order will stay valid till 25th December. So that is called GTD order until it gets executed. I can enter the number, the disclosed quantity. If many number of lots I'm wishing to place the order, I can enter the number of disclosed quantity order, which would not be visible in the bid ask section. And there is one more small orange colored link called charges. So if you click on this charges, it will show you what are the charges applicable basically. So there is this brokerage which says 20. So that means that the brokerage at ICICI for commodities is rupees 20 per order. So going ahead, the exact breakdown along with the percentages, at what percentages these charges are calculated, will be explained by my colleague Beauty Dubey. But for now, this is basically the charges that are applicable for this particular trade. So I close this, that's just for verification. And then I click on buy. So after I clicked on this final buy button, there are going to be a few pop-ups coming up if you are not registered for the commodity segment yet. So let's go through what are those few clicks that you will have to do in order to register. First, this pop-up that is shown here is the terms and conditions pop-up. And conditions with respect to the commodity segment, which you will have to accept first. And why is this necessary? Because if you are normally opening an account, you're by default registered with NSE or BSE, right, for stocks trading. But since commodities are traded separately at the MCX exchange, you will have to do this verification separately with MCX again. So that's why there is this registration process. So there are these terms and conditions that you will have to accept first. I'm clicking on accept here. So once I do this, the second pop-up that you're showing that you're seeing here is the declaration. If you look at the content here, brokers can enable clients to trade in derivative segment only if they have collected documents pertaining to financial details of the clients. That is, in this regard, you by selecting accept, you are authorizing ICICI Securities to take the bank statement or the demat statement, right? Or the demand account linked with your trading account. So what does this mean? In order to enable the product to you, you will either need to have a bank account, a linked bank account, which is either 6 months old, or you will need to have a particular demat balance, right? So you are authorizing ICICI to consider that you would have had a ICICI bank account linked to this trading account, so that the back end will automatically fetch the 6 month statements, or whatever demand balance you have that can be considered in order to enable the product for you, the derivatives product for you. So that's why you will need to accept this declaration. So once I accept this declaration, so now there is a third pop-up. That is something called mandatory communication. This is where you will give the trading preference. That is, you will have to update your commodity trading preferences by just clicking on OK here. So once you click on OK, so there is this page that you will get, which shows all the different commodities that are being traded at the exchange at MCX. So what does this mean? There are like different options for you to select, like value chain participants, others. And if you scroll down a little bit, you can see farmers against these agri commodities. So this means that MCX would want to know what type of a participant you are. If you are wanting to trade in cardamom, castor seed, etc., which is maybe currently not with good volumes, but still for your understanding, if you are trading in any of those agri commodities, the MCX, the exchange wants to understand if you are a farmer. If you're a farmer or an FPO who's trying to hedge in any of your underlying, your agri underlyings. If you are selecting value chain participants, that means you are involved anywhere between anywhere in the value chain of that particular commodity. So maybe you are hedging because of that. So if you click on others, then that means you are anything other than this, that primarily a retail participant. So by default, if you are a retail participant, so there are other options have been selected already against all the commodities. So just towards the end, you will have to click on update. So I'm just clicking on update here, so that if you're a retail participant, you're just saying that you're other participant and not value chain or farmer participant. So once you have successfully updated these details, you'll just click on OK here. You'll go back to wherever you had been trading. So basically, if you are not registered for the commodity segment previously or while opening the account, you will be getting these three pop-ups. One was the terms and conditions. The second one was the declaration to consider your bank statement or the demat balance. And the third pop-up was your mandatory communication details or the trading preference, which where you will say that you are only a retail participant. So these three pop-ups, you will have to click on OK and you will have to accept them. So once these three steps are done, your registration process is done. That means your application is done. So this details, now that you have given all these three clicks, your details will be sent to MCX. This process will be done twice a day. So this your details will be sent to MCX for verification, and MCX takes 1 or at the max 2 working days to revert to confirm your participation in the commodity derivative segment. So once MCX reverts, you will get a UCC client code, which is like unique client code with respect to the commodities market, and then you will be able to start trading. So once this is done, once this registration process is done, and after 1 or 2 days, max by 2 days, if you are eligible to trade in the commodity segment, you will get an UCC. And when you place the order and when you click on buy, it will take you to the order verification page. So once I enter the details here and I came to this order verification page, I can check the order details here, whatever I had entered. So there's this order type limit because I selected a limit order and I entered the price. So the product is future normal product, and the price I entered was 7,600 rupees per 1 gram, because this is a gold petal contract where the lot size is 1 gram and the price quote is also given in per gram range only. So the lots is 1 grams, which is the lot size for gold petal. And the order value again is 7,600 into the number of lots, which is again 7,600 here. The validity is GTD, good till date that I've selected. While explaining, I selected one disclosed quantity, and that's what it shows. This date is the GTD validity date, which is 25th December that I had selected. And the contract last trading date is 31st December, which is nothing but the expiry date of this contract. So once I do that, now for final confirmation, I swipe at the bottom. I just swipe to buy and the order is submitted. So you can click on the, it had directly taken me to the order book for the pending tab where it shows gold petal 31st December 2024 contract at 7,600, the price that I had entered, but the LTP is 7,690. So the executed lots is 0 out of 1. So 18 December, I had placed the order now. So buy, it's a normal order, it's a limit order, and it's a JTD order. So basically the informations have been given, everything here. And the order is in ordered state because the price has not yet been reached. If the price reaches, my limit price is 7,600. Automatically this ordered tag will become as executed tag, and this order will get into the executed tab section at the right. So as for now, it is in the pending order section. So if I click on this order, I will get this tray from the bottom. So here I can see more details about this order: the exchange, the product type, date, reference, uh, the contract last trading date, the exchange order ID, the order log, at what time it was paid, what price, and the remarks also say the accepted by the exchange. The order had been accepted by the exchange, and we will just have to wait for the price to be reached. Also, here I will be able to either modify the order. So if I click on modify, I will be taken back to the place order page. For the same order, I can change the order details, like I can change the limit price, or I can change it into a market order. I can increase the number of lots. Obviously, for the number of, if you increase the number of lots or by changing the prices, obviously the corresponding margins would also change, margin requirement. So if more margins will be required based on the changes that you have made, it will give you a prompt for requiring more margins. Or I can click on cancel order, which will cancel the order immediately after asking for a confirmation. Reorder will place the same order second time. So now one lot of gold petal order is already placed. So if I click on reorder, it will take to the place order page with the same details, and if you click on OK, another order with one more lot of gold petal will be placed. So that's what these three options mean. So I will just, for example, I go to the modify page. I clicked on modify. It had gone to the order placement page of the same existing order. So maybe here I can increase the number of lots. I've made it 2. Or maybe I can change the price. Instead of 7,600, I make it 7,625. Right? So now I then click on modify buy at the bottom. It will again show the contract order details. I can swipe this thing at the bottom to modify. So now you can see it had asked for more funds required. So we need to add more funds here. So I'll click on proceed. There you go. It again takes us to the order book where the existing orders which have not been executed have been shown here in the pending tab. So now I can see at the lots there is 0 out of 2 because I modified it at 2, and the price is also showing 7625. So that's why I will be able to modify. So if I click on cancel, it will ask this confirmation page. If you swipe this button, it will help you to cancel the order. And to make it execute, I'm modifying it again, and I'll make it a market order so that whatever price it's going on, it'll get executed. And let's make it one lot. I'm just swiping to buy. The order had been submitted. So now this is the pending order book page, and we can see no orders here because that was made into a market order. So obviously market में जो भी price चल रहा होगा, it'll get executed at that price directly. So I go to the executed tab at the right, and here you can see 1 out of 1 lot is executed by normal GTD order that had been executed. So now, in order to check my open positions, at the bottom, I'll click on this portfolio. So once I click on portfolio, it will show me the open positions. Next to the open position page, there is this portfolio page also, where you can check all the contracts that you've traded in the recent times. Like next to this search button, there is 3 lines. If you click on it, there is this filters that you will get. So this is from date and to date. This dates represent the expiry date of the contracts. So all the contracts expiring between these 2 dates is what the contracts you will be able to see in the portfolio section. You will be able to edit the dates also. So now this gold petal contract, the second contract, I'll click on it and you will be able to see the contract details and the profit and loss details. And if you click on this view transaction history at the bottom, you'll be able to see all the transactions that you have made in that particular contract. Right. So if I had bought and sold that particular contract in 2 transactions, so those 2 transaction entries I'm able to see here. And if you had done more transactions, you will see more transactions here, and the total P&L is also visible here. So this is with respect to the portfolio page. And to check the tools that are available in commodities, I want to take you through shares as margin. So the bottom right corner, there is menu, and next to it, there is something called tools. So if I click on it, I can see the various tools that are available with us. At the top, you can see the tools with respect to stocks, then for futures and options, mutual funds, right? So under stocks, there is this research ideas, one thing that will be helpful for commodities. And then under futures and options, you can see shares as margins, right? This is something that I wanted to explain to you. So under shares as margin, you will be allowed to pledge the shares that are lying in your demat account, create limits against them, and use those limits to place orders in the commodity derivative segment. So that's what basically shares as margin allows you to do. So the 3 steps involved all, I go to the stocks page, I select the quantity and I pledge them. Then I will get an OTP for confirmation, the OTP from the NSDL website. And third, instant limits is created for trade. So I close this. So once so at this page, whatever stocks are available or lying in my demat account, that would be shown here. So you can click on the stocks, click the number of select the quantity, and you can click on pledge at the bottom. So once I do that, after entering the OTP, I will be given the limits immediately. So if I go to this allocate limit page, I will be able to see the amount or the total SAM limit that I've created from this total securities limit. So here I will be able to enter the amount and move it to any other segment that I wish to do. So here I will select on commodity and then I click on submit. Of course, there is no funds here, so it will give me this pop-up, but ideally it will allow you to it will allow you to move the funds across different segments. So that's with respect to shares as margin. Simultaneously, in the tools section, there is something called research ideas. I will click on this research ideas, go scroll and go to the commodities part. I've clicked on commodity and there is two tabs, which is futures and options. So this will show me whatever open research calls or trading recommendation or which is available. So there is one open now. So I would click on this sell button directly so that it'll help me to execute the order directly. So the same contract details will automatically come up in the place order page and I can just click on sell. So here it is giving you the target price. The current price is 172. It is asking you to sell so that the prices would reach 135. So and the stop loss suggested is 188. So accordingly you can execute the orders based on this trade recommendations. So here I would like to highlight a very important feature with respect to this research, that is the commodity research notifications. Of course, these research is getting updated here as and when our research analysts are coming up with new research recommendations on a live basis. But wouldn't it be so helpful for you if you also get a notification simultaneously whenever a new trade recommendation is updated? So that's one. So you will also get a new trade recommendation. And other than that, even the updates on those recommendations, like if there is a partial profit booking, if there is a full profit booking, or if the stop loss has hit, so all these updates also you will get in the notification. I will tell you where you will have to enable those research notifications. You will need to go back from this page. And at the bottom right corner, there is this three dots for menu. So get into the menu, and at the top, just below your trading ID, there is a symbol for settings. You click on that. Once you open that, there is an option called subscribe notification, the third entry, the subscribe notification. You click on it, and at the top here, you scroll a little bit. You scroll. So there is one called commodity trade. This is not exactly about the research notifications. If you enable this commodity trade notifications, you will get notifications whenever an order is executed, cancelled, or modified. So those notifications you will get by enabling this one. But if you scroll a little bit more, there is this research I click to invest. So you will have to click on this research I click to invest. Scroll down a little bit, the second section, which is research I click to gain, under which there are commodity futures and commodity options. I am clicking on it. I'm enabling it. Your request will be taken. So once you have enabled this, your request has been taken in and you can go out of it. So after this, whenever a new research recommendation is given in the commodity segment in both futures and options, you will get the notifications on a live basis. Now, our last speaker, Beauty Dubey, will take you through these commodity trading product tools and services and what are the features available all on the website. So, she will take you through the website, a quick run through of whatever I had shown you on the mobile app on the website, and then she'll also explain you all the tools and the brokerages and the charges involved in commodities trading at ICICI. Over to you, Beauty.
Thanks, Arvind. Hello, everyone. My name is Beauty Dubey. I'm also a product manager of commodities at ICICI. So now you know about commodities and you know about our application. Let's take a tour of the website and know about the tools and features available with us. Very first is shares as margin. At ICICI Securities, you can pledge your shares, create limit, and start trading in commodities using 100% shares as margin. For intraday trades, interest is zero. And if you are carrying forward your trades, there's an interest of 0.027% per day. You can transfer your SAM limits, which is shares as margin limits, seamlessly across segments and use it. Please note, you cannot buy and carry forward your option buy position with shares as margin. You'll have to pay cash next day. If you have SAM and cash limits both available with you, system will prefer SAM limits, then take up your cash limits for creating the position. If you don't want to use your SAM limits, it's better to deallocate it from commodity segment and allocate it to another segment. next is research and reports. Now, at ICICI Securities, you can find daily morning, daily evening, weekly, as well as monthly reports. We also provide yearly reports for commodities. Now, these research reports are prepared by a research analyst, and you can find it on our website. Let's take a look where these reports are located. So, to view the research reports, you don't need even to log into our website. You can simply search for ICICIdirect.com, go to commodities and select, I have clicked on commodities. Post that, you have to click on products. To view research reports, you need not to log in into the account. These are available on the non-login section. So you have to go to commodities, go to products, scroll down, and you'll find these daily morning, daily evening, weekly reports, monthly reports, and the special report, which is the yearly report. I hope this is clear. And guys, if you have any question, please put it in the chat box. We'll take it up one by one. Okay, so now you know where these research reports are located, right? Let's move back to our presentation again. Next is trading ideas, which is I click to gain. So our research analyst provide live intraday research recommendation. If you can find it on trading ideas, I click to gain. It is available under commodities smart tools. Now for this, you have to log into your commodities. Then you have to go to smart tools, and under smart tools, you have to click on I click to gain trading ideas. Now you can see there are commodity futures as well as option calls which will be given here. These are live research calls. You'll find the recommendation price, target, stop loss. If there's any update like book profit or stop losses hit, you can find it here. For this, you can subscribe our notifications also. If you want to know how to get this research calls as notifications, you can subscribe for notifications using our mobile application. So next topic is calculators. We at ICICI we provide commodity calculators for our customers. If you are new to commodities and you want to know how much margin you are going, you'll have to pay for taking position in commodities. You have to go in commodities again, go to smart tools, go to margin calculators, and from here you can figure out the margin required for trading commodities. If you want to plan any strategy, you have any strategy in mind, maybe you want to buy future of current month and sell future of farm or any other strategy which you are planning out, you can put it here in the margin calculator, know the margin benefit which you will be getting because of this hedge position which you are creating. So I'll take it here as an example. Let's see, I'm taking gold. Now it will already fetch expiry date on its own. If you want, you can change it. Strike price and option type is not required because I have selected futures. So you can change lot size, price. It is all auto-populated, but if you want, you can change these variables. Fine. Now, if you want to know how much margin is required to buy gold one lot, which is 1 kg, so it has calculated you require 7,52,329 margin for buying future of gold 1 kg expiry of 5th Feb. Now, if you want to create any strategy, suppose you want to sell option of 27 Jan, strike price is there. If you want, you can change it. Lot size, action. I said I'll sell option. Let's check it out if I'll get any margin benefit. So if you would have sold this option call of 27 Jan, you would have to pay 6,29,570. But since you have created a strategy out of it, you will get a margin benefit of 4,24,261. There's a margin benefit you are getting because you have created a hedge position here. Fine. This is the margin calculator, one of the most important, I would say, feature. You can figure out any margin, any strategy benefit. If you are new to commodities or you want to check out the margin before taking position, you can use this tool. Next is brokerage calculator. If you want to know what is the break-even price which you will be plan out, for that you have to go to commodities. You need not to log in. Just go on commodities, simply then scroll down. So this is commodity brokerage calculator. Now here, if you want to know the all the expenses, including brokerage and the break-even point, you can populate it here. You have to select your contract. Gold is by default taken. Let me take it crude oil. Buy price, sell price is there. If you want to change it, you can. Suppose I have to make it 6056. Number of lots is there. If you want, you can change it again. Now total trade value, total brokerage, which is 40 rupees, 24 buy, 24 sell, total 40 rupees. Exchange transaction charges 25.34, SEBI charges, GST, CTT, stamp duty. Total expenses which you'll have to pay for creating this position is 151 rupees 11 paisa. And per lot expense calculated rupees to break even is 1.51. Means if you'll get a price movement of 1.51, you'll be at a position of no profit, no loss. Fine. And if you have taken up this price, buy price and sell price, you will get a profit of 4,289 paisa. Now coming back to our presentation, there is a difference given between equity and commodity derivatives. Of course, you know, there are many equity scripts available and tracking each one of them is little difficult. However, you have limited number of commodities, you can easily track them. You can know the prices which are affecting it. You can easily just compare it with the previous day. You can track them. Futures margin required for equity, it is more than 1 lakh. Margin required in commodities, it is as low as less than 1,000. Why? Because you have smaller contracts available, like for gold, you have gold petal, gold guinea. There's small contracts in 1 gram of gold. So your margin requirement would be less as the lot size is less. Contract value is also smaller because you have small lot size available here. Margin requirement is between 20 to 30%. For gold, you'll have to pay approximately 10% of margin. And similarly, it is for other commodities too. Market timing, you get extended market timing as when you talk about commodities, because commodity market is open from 9 a.m. to 11:55 a.m. At times it is 11:30, at times it is 11:55. This is because of the US daylight saving. Fine. So next is most traded options. Now crude oil and natural gas are the most traded options in commodities. These are highly volatile and contracts are available up to 12 months ahead. However, you have to keep in mind the liquidity of the contracts while choosing them for trading. Again, CTT is applicable here, and these are directly linked to the international markets. Not only Indian markets are going to affect this pricing, but the international market. If there's anything happening in the Middle East, it is surely going to affect your crude oil pricing, right? So these commodities have international linkage. Brokerage and taxes charges. So brokerage is rupees 20 per order. This is the flat brokerage for commodities. Buy side 20, then sell side 20. It is flat brokerage. So if you are going to buy 1 gram gold or buy 1 kg gold, brokerage is going to be the same. So you have other expenses, taxes and charges available here in the screen for for your consideration. For futures, you will have to pay CTT, that is 0.01% for future sell, 0.05% in options. CB turnover charges is also there. You have to pay stamp duty, exchange transaction charges will be applicable, and GST on the brokerage and other charges will be calculated. So now you know about the calculators, where to go. You know about the research recommendation, where they are available. Apart from this, you can check out your orders, commodity order book, commodity trade book. You can go on these pages if you have to check status of your orders. Again, if you have an open position, we have an open position page here just to track. There's a place order. If you want to place order for commodities, you can use this, or else you can go to watch list. and select your contracts, add it to your watch list, create your position from there. Fine. You can also square off your position using place order page or open position or watch list. Portfolio, you can check out your commodities portfolio page. For that, please be mindful of the dates you have selected here, because whatever date you have selected, your portfolio will be changed on basis of these dates. Funds, if you're trading in commodities, please add your funds to commodities, because we cannot fetch your funds from other segments. So if you are trading in commodities for market, you'll have to keep these funds added in commodities segment specifically. If you have not allocated funds to commodities, you have any position, if there's margin shortfall, your position will be squared off. For shares margin, I forgot this point. For shares margin, you can pay 100% shares margin for if you want to trade in commodities, you can use 100% shares as margin, but for mark to market, you'll have to maintain cash. Fine. Smart tools, you have option chain. If you want to check out the option chain for any commodities, you can go to this tool. Other trading ideas, I have already explained this. This live research recommendation, margin calculator is there to know the margin, basket order, and commodity list. So you can explore these also. Reports you have available here, FAQs you can look for. This was all. If you have any queries, please put it in the chat box. We'll surely take it up. And thank you for trusting in us. We are the leading member of the exchange financial year 24. We have been given leading member of the bank broking award by MCX for consecutive 3 years. And this time we got leading member of the exchange award for financial year 24. We thank you all for trusting in us. Please keep supporting us, keep exploring. With this, now we have come to the end of the session. Thank you for joining us. We do this webinar every fortnightly Thursday at 4 p.m. On alternate Thursdays, we also do another webinar which is on forecast trends and insights of commodities, where my colleague Arvind Jinka and Anup Sahu, research analyst, talk about fundamentals and technicals of the commodities. They talk about trends, supports, and resistance levels of the commodities. So we can connect on Thursdays. If you have any queries, let us know in the chat box. We'll answer them.
Investments in the securities market are subject to market risk. Read all the related documents carefully before investing.